Hi everyone, this is Finance Meets Real Estate. We have Bronson here today. It's a real pleasure to have him. So he has outstanding experience in real estate and capital raising. So he's going to talk about what he learned from speaking with 1,000 investors individually. He's the managing member of Bronson Equity, and he has raised over $60 million from investors over the last few years. He's also a general partner in more than 60, he's a general partner in more than 60 million multifamily, currently with over 800 units in the southern US. He's also previously, if you would correct me, I'm not sure, previously a partner with famous Michael Blank on Untitled Equity.
That's correct.
Between 2018 and 2020. So I think on about 600 units of that. It's a real pleasure to have Bronson here today, and I'm really excited to learn from him, and thank you for joining us and sharing your knowledge with us. If you guys have any questions, feel free to put them on the chat during the lecture, or we are going to do a more open Q&A at the end as well. Thanks, and with that, I'm going to pass it on to Bronson.
Awesome. Well, Stefan, thanks so much for having me. I see a few familiar faces out there. I know Nolan, I think we've connected a little bit, a couple others of you. So looking forward to having this time, and hope that you guys get a lot of value out of this, and anything that I don't cover, we can go over Q&A. This is not the authoritative way to raise a bunch of money. This is just the way that it's worked for me. And I hope there'll be some principles that will really be applicable to you. So I'm going to go ahead and share my screen, and then we'll kind of jump right into it here. And then we're going to have, of course, a little Q&A at the end. So let's pull this up here. Okay. Let me pull this up. Okay, cool. All right. You guys able to see that?
Yeah.
Okay,
that's
great.
Perfect.
Okay. So awesome. So this, I've updated a little bit of some of the slides here because I've raised a little bit more. So I've had over 1,200 individual phone calls with investors and raised now over $17 million. It's 1,400 units now, about 100 million in real estate. And one of the things I want to touch base on is just, really what the mindset of a passive investor is. And it is important to be open to realize that people that are very wealthy often think very differently than we do. And I don't know if you're like me, where you didn't necessarily come from a wealthy family. I came from a very middle-class working family. My parents are both teachers, and we didn't have a lot of money. So even if you do come from a wealthy family, it's just interesting as you focus in to really understand what really drives people that would be interested in passively investing in one of your deals, and really understanding that mindset. So we talked about, why is it important? Different people, I imagine most people here are interested in raising money. There may be some others that are here for other reasons, but this principle, learning how to raise money, will allow you to raise millions of dollars in a very short period of time. In a recent deal, this was actually last August, so it's coming on a year now, we raised $8 million in 24 hours. We basically probably could have raised about $15 million for that deal. And I'm going to get into kind of how we did that, and how you can also do the same thing, and really give you some of the talk track of, when you're speaking with passive investors, people wonder, well, what do I say? I get somebody on the phone, they're really wealthy. Like, how do I do that? Or do I meet them in person? Or how does that process work? So I'm going to get into kind of all of that and some of the psychology around that. So I hope you find it valuable. If you are a deal sponsor, I know Stefan said he's doing active deals himself. I imagine some of you are active sponsors as well. So there are people that, like myself, we're more capital partners, where we raise money and we're involved in the deals, but there are people that are the operator. They're finding the deals and are actually operating them. Well, this is going to give you the ability to understand who you're serving, what's important to them, and hopefully have aligned interests so that you can have partnership for many, many years. And that's really what allows you to scale. So Kenny McElroy, who's a super successful investor, wrote a number of books, worked with Robert Kiyosaki. He basically, I can't remember how much he did. It was close to, hundreds of millions of dollars, and he only worked with about 60 different investors. So again, if you treat your investors well, you'll have all the money that you ever need. And so that's what's important as a deal sponsor. And if you are a passive investor, and I think for all of us, whether you have money or you don't have money, we should all aspire to be passive investors. I passive invest as well as raise money. And these are questions that you should be asking, or maybe what other investors are asking. So hopefully in this approach, we'll come across of just things, how do you qualify what a good operator looks like and somebody that you should invest with? So that's something that as well, if you're raising money, it's important that you understand that. And if you, for two reasons. One is that you need to know what people are looking for. And then secondly, eventually, or even now, if you have money to invest with other operators, you should know what really to ask as far as we go into that. So like I mentioned, I'm Bronson, and I work with, my company's called Bronson Equity. I have this report I'll talk about a little bit. I wrote about the single best investing strategy during and after a pandemic. I'll share some of my contact information later so you can see that. So I wanted to share this. A lot of times, like I mentioned, we think that everybody thinks the way that we do. We think that everybody approaches life the way that we do, approaches money the way we do. And what we start to find is that, passive investors really are a different animal. If you're a zebra and you expect a giraffe to act like a zebra, they're not, right? They're going to eat different food. They're going to move at a different pace. They're going to do different things that are important. And so we have to be willing to kind of let go of some of the things that we are used to be able to understand what's important. So we're going to get into that. Obviously, there's different stories for different types of passive investors. So one of these types is what I call the busy professional. And they're just busy. They're just go a million miles an hour. You have a doctor. My background is working with a lot of medical professionals. Some of these guys, work 60, 80 hours a week, make millions of dollars, but they have no time. They're just super, super busy. You got lawyers, you got CPAs, you got salespeople, busy professionals. That's one group of one of the kind of the major categories. Another one is a business owner. Some people that own a business, maybe they're active in real estate. A lot of our investors over the years have come from other real estate professionals that actually invest in our deals. So some people have a service business, some they do something within finance or some other business. And a lot of issues that they have really are, how do I deploy this money that I'm making in my business, and how do I get a good return with it and also reduce my taxes? That's also an interest for the busy professional, is how to reduce taxes. And multifamily syndication allows you to do that in a couple different ways. Another group is people that are retired. Some people are retired, they want to, or they're semi-retired. They travel a lot. They want to spend time with family. They're really often looking for cash flow, and they're looking for a safe investment that is going to appreciate over time and is not as volatile as the stock market, which these days, with the way the stock market's been, it can be, right now, I mean, some people feel it's very high. What goes up must come down. There's always risk there, right? And there's a risk that multiple times in the past, over 50% or around 50% of the stock market has come down within a 12 to 18 month period. So people are concerned about that. So things that are important, the number one most important thing, and the first question that individuals ask before investing with anyone. And again, having so many calls, it really comes down to this idea of, can I trust you? Can I trust you in two ways? One is, can I trust you that you are a trustworthy person, that you're not going to take advantage of me, that you're actually looking out for my best interest? That's why a lot of people, first of all, you get investors, a lot of it's from friends and family, because there's a trust there, just on the sense of like, you're good-willed and you're good-natured, and I trust who you are. The second trust is really, can you help me? And that's also why friends and family don't always invest with you right away, right? Because they don't know if you're actually trustworthy in helping them with their wealth. So maybe your background is in engineering, or maybe your background is in sales and it's not in real estate at all. So they might say, hey, I trust you, but I don't know if I can trust you with my retirement. So those are two questions that requires to trust that people are going to ask about whether they can, trust you with investing with them. So that's a big deal. So can I trust you? That's a big thing people look for. And really what you're trying to do in this process is to develop a relationship to navigate in the investing process for someone, because we all need a guide. We all need people to help us. And it's really, it comes across when someone is genuine and they really are trustworthy and they're credible. And if you have experience investing in any asset class, those are things that make you credible. Some of this might be common sense, but I'm going to kind of develop on this here in just a minute, kind of why, as well as why that's important. So How do you develop trust? How do you develop more trust with people so that they not only trust you from a ethical perspective that you're going to do what's best for them, but also they trust you that you are qualified to be able to help them? And again, those are two things, but the thing that really can help you with both is really by adding value. And what do I mean by adding value? I mean basically doing things that will be perceived as important to the person that you're helping. So when you start saying, hey, this person that's paying 50% taxes in their business or as a professional or close to 50% taxes, you say, hey, but what if there's a way to reduce your taxes? And you say, here's a way you can do this. And you just educate for the sake of helping them. Now, again, they may never invest in one of your deals, but what you're doing is you're putting, you're giving a lot of value out there. And so maybe the person doesn't invest with you, they'll refer you to someone else. You don't always know how it will come back, but it's kind of like a karma principle, right? You put something out there that's good, and over time, those things definitely come back. So I do a few things. I give free resources away. I have this report on my website on the left there that basically it's a free ebook, reports 24 color pages. People go in and they can download it for free, and then I get their email. So again, I can kind of continue to give them content, and there's kind of a trade there, right? I have a podcast that I'm starting up called Mailbox Money about passive investing. And then I do my blog. I do different things and different ways to add value to people. I've more recently started a kind of a monthly webinar series that we talk about different issues such as inflation and precious metals and how do you vet sponsors. And I have kind of a panel where I have three different, myself and three other people on there. Those have been very well attended. So those are ways that, again, I'm trying to add value to people so that they can look at me as a person of value. So that's usually the first thing people are looking for is, hey, is this person a person of value? For you, do they look at you and do they say, this Nolan, this is a guy I can trust, or Bill, this is a guy I can trust, or Stefan, this is a guy I can trust because they're providing these things for me in some way. So free resources are a way to do that. Like I talked about, there's panels. I do a meetup. Being on podcasts, being on things like this. These are ways that you can make yourself both an expert or host experts, and you're just a person kind of in that mix. The first person that ever invested with me, I love telling the story because it's interesting, and those people that have been around a while usually have a story that's similar. But I actually went to all my friends and family, and I said, "Hey, I want you to, consider looking at this deal or investing with me." And I was sure somebody was going to invest. 62 people. I did the surveys. I went through the questionnaires. I thought these people were ready. I had a deal, and literally nobody invested. It was a big goose egg. Nobody wanted to invest with me. But the first guy that actually did invest was from a meetup that I did, an in-person meetup in Pasadena, California, where I live. And this guy comes up to me and says, "Hey, I'd invest in one of your deals," just unsolicited. "Hey, I'd invest in one of your deals." And I'm thinking, "Oh, that's interesting." So I take him for coffee and I bring a sample deal. So if you don't have a sample deal of what a deal that you would like to do looks like, if you have a prior deal, then bring that. If you don't, just make one up, get one off LoopNet, and just again, this is the type of deal that I would like to do if we had a deal. So basically I presented this deal that wasn't, it wasn't a live deal, but I presented it to him and I said, "How interesting would that be to you?" And he said, "I'd invest 100K with you." And I said, "Oh, okay. Well," and I basically at that point introduced him to another guy that was at that same meetup that I met for the first time. And I connected the two of them. So that's why I raised 100K for my first deal. And you think, well, why did that happen? Why did that guy approach me and invest? Because I was perceived as an expert because I was hosting one of these meetups. So the more you can kind of be in that role where you're the person who's kind of coordinating, you're the person that's coaching, you're the one that's kind of setting things up to be able to do that. That's what Stefan's doing here. He's bringing in experts, and that's a great way to be a person of value in those things, and to have people to look to you to both get information as well as to invest. So I found basically that, if you can start developing a relationship with people, particularly getting people on the phone, I think it's one of the most valuable things that you can do. And so we have, my website, and I've got my website listed down there in the lower left. You can take a look at it. You can follow the funnel and see, but I have basically an investor club. There's different buttons on there people can join. And I want to make it really easier for people to join the club and set up a call, because I know if we get on the call, I can develop a relationship with people and I can start to really continue to add more value, but really figure out what their goals are And it really allows me to start to build that relationship with investors. So after I've had 1,200 calls now with investors, I've realized again how important this is. And I've got some really specific metrics in a little bit about how effective that really is. So I really can recommend, if you don't have a website, you get a website. And then I showed you that lead magnet, which for me is a pop-up, is that free the ebook that basically people can download. I get their email, and then basically everything is to try to work them through the funnel, the sales funnel, which, again, you try to pull people in up here, and then you're basically trying to get them to take the next step, to sign up for an event, to join the investor club, and then eventually to invest in a deal. So a couple of things after they click on the join the club on the left there, the Calendly page comes up to schedule a call. And then even on my email, I put something in the bottom of my email when I shoot out emails about, hey, here's a little thing we can chat on. And it's basically like a 15-minute call. They can set that up as well. So again, just, basically those are things that really allow more connection with people. So when it comes to time, we talked about time being really valuable. Time is valuable, obviously, for everybody, but for busy professionals, there's so many things that they have to do. So the easier you can make the process of everything, the more ways that you give people a chance to connect with you, to connect with what you're doing, the more opportunity that you'll have to add value to them. And the more likely over time, they will either invest with you or refer somebody else to you. And I've seen that again and again, that will happen. So, like I mentioned, they're very busy, and it's interesting. A lot of people, when you look at physicians or CPAs or other things, if you break down it into an hourly, how much money they make, it could be 100, 200, 500, $1,000, whatever the amount is. It's really important that we understand these people are very busy, and that, time is really important. So something that you can do is teach people about passive investing, be a guide for them. One thing I think a lot of us have done, maybe some of you are still there, and I don't judge anybody that does, because sometimes there's great opportunities there, but single family investing can be very attractive, but often we undervalue our time, and people undervalue their time. I can't tell you how many physicians or other people that I've met that they have a rental house or two, and they're not really getting a lot of cash flow, and it can take a long time. But the nice thing about passive investing, particularly multifamily, is that over time, it becomes truly a way that you can scale. There's a little bit of work on the front end where you're vetting the team and vetting the deal, but it really is much more hands off, and people actually continue to hold on to their time. Like I said, some people can be tired landlords, and they're just doing too much, and they realize that it's too much for them. And that's again, a couple of the reasons that we teach people to look at passive investing, particularly in multifamily. Now, you may have another asset class that you like. Maybe you like investing in self-storage or mobile home parks. I think those things are all great, and so you can just apply these principles to them as well. So the question comes up: how do you help somebody who's super, super busy? Like I said, you make it really easy, and you offer different mediums for them. So we talked about the calls. You can do podcasts, you can do video, you can do written, and just educate. Because just because somebody, maybe they're really busy, but they like when they go on runs, they'll listen to a podcast, or maybe they're at home late at night, they like to watch YouTube to try to learn things, or maybe some people are more written form. So just give them different ways to connect to it, and you'll find that people gravitate towards it. So sales. Now, again, when I talk about sales, my background is sales, but sales and education are actually very similar. And the reason I say that is because raising money is a sales job. So if you are looking to raise money, you are looking to develop relationships with individual people, and you're trying to get them to invest in your deals. And so that is a sales role. So how do you sell? Well, the best selling I see, people don't like to be sold. They don't like to say, hey, you look really great in this 1975 Buick. And everybody wants that experience, right? Because somebody's actually out there. They're not looking for someone else's interest. They're only looking out for their own interest. So education is just saying, hey, I want to help you on this journey. And again, it comes back to that adding value. So how does that really work? So what are you actually going to teach people? Well, what do people need to know if they are wealthy professionals? One doctor that I had a call with not too long ago, net worth of $5 million, never invested in any real estate, only does stocks and bonds, and has a money guy. And that's very common. And for me, one of my passions, I used to be an investment advisor. I kind of saw behind the curtain, and I realized that Wall Street, in my opinion, does not treat investors well. And there's a lot of hidden fees and a lot of things that are kind of underhanded. So I feel that everybody would be better off to be in Main Street assets such as multifamily syndication or other assets. So to me, these are things that I feel like it's really important to teach people. What does it look like to invest in your deal or in any deal? Just what is investing? What's that process look like? Teaching people that, teaching them the benefits. What are the tax benefits, the inflation hedge benefits? What are the other benefits that go into the returns, and what are the risks? So those are things that I try to work with people on. I also look at vetting sponsors. How do you vet a sponsor? If you're a wealthy person, you've never invested in a deal, you want to know, like, how do I, which deal do I get into? And a lot of people get stuck in analysis paralysis because they'll look at a few deals and they're like, I don't even, how do I even evaluate this? So I try to teach people, well, you need to look at the experience of the operator. You look at what type of deals they do. You need to ask them about their mistakes. And if an operator doesn't have anything to share about mistakes, then it's time to move on because they're either inexperienced or they're not being honest. So these are things that I teach. I teach to passive investors, and again, it's a way that I try to add value. So I'm going to get really nerdy here for a minute. So just put your nerd hat on for a minute here, and we're going to get into the numbers. But I'm just kind of going to go over these. This is specifically from over 1,000 calls and exactly how many of those converted, and some of the results that came from that. So now it's actually over 1,200 investors, but at this time it was 1,000 investors. So basically, it was a 30-minute call each, some were less, some were a little more. I used a standard talk track, and I'll get into that in a minute. So we had kind of a common way that I would walk investors through that call, and we had investor questions. The average net worth that I spoke with was approximately $2 million. Some were over 10 to 20 million. So that means some people came on, their net worth was 200,000, and some people were on there and their net worth is 10 million. So when you average out over time, it was around 2 million. And there was a 17% conversion rate. And that's really interesting if you think about that, because that means less than 1 out of every 5 people that I spoke with actually invested in a deal. So again, this really is a numbers game, right? So you're gonna have to talk to a lot of people. You're gonna have to grow your list. You're gonna have to continue just to realize that not everybody you talk to is going to invest with you, and that's totally okay. But again, it's people that are willing to be someone who adds value, has many calls, is able to educate. That's how you raise more and more money as you continue to do that, and you realize that not every single person is going to invest. So during this time, there was about an 18-month period, I averaged 13 calls per week. The average value per call was $12,000. Now, what I mean by that is whether they invested or not, each call was on average worth $12,000. So again, when you add up, and that was not how much money I made, that was how much was actually invested in a deal. So it's really interesting. That means per week, that's just, I don't know what the math is, 12 by 13, but that's like $150,000 or more invested per week. Maybe my math again is a little bit off, but basically it's just important to realize these calls have a lot of value. You think about that. If every call you had with an investor, you knew that was going to result in $12,000. Now, again, our average investment size, you can see below, is 72,000, but if you just average it out per call, it was 12,000 per call. So the last deal, we actually did a couple things differently. Our minimum investment was $50,000. Again, I'm not sure the experience of everybody on the call today, but if you've raised money before, you know that a lot of people, if your minimum is 50K or 100K, about 80% of the people will do the minimum. Whatever the minimum is, they'll put it in. And so the last deal we did, we basically increased the minimum to 75K. And then we also had a conversation around how much people should put into a deal. And just a little heads up, you can't necessarily tell people how much they should invest in a deal, but what you can say is, hey, if you have, if you're higher net worth, 2 to 5 million or more, and you want to be, 50% invested in different multifamily deals, that means you might need to be in 30, 40, 50 deals at 50K. So it might make more sense to put in 150 to 300K. And we implemented this on that deal. And we basically had a first-time investor put 500K in as a first-time investor, which is pretty amazing. So don't always assume that, people are going to just only put the minimum. And also remember this, and we're going to get into this, that you have something that people really need. You are solving a problem. People have a problem, and it is a money problem, and they have too much money where they don't know where to put it. I know that may sound a little ridiculous, but it's true. If you have a lot of money, you're saying, well, where do I put this to where I know it's not going to be lost, and I'm going to be able to get a good return? So again, you are solving a problem. So there's a lot of psychology around that in a bit, and I'll share a little bit more about that. So to raise more money, you got to speak to more investors. It's a numbers game. Like I said, you're providing a service. People have to get to know, like, and trust you. And the investors are looking for great deals and great operators. So keep that in mind as you get out there and speak with investors. And the question comes up a lot is, well, hey, Bronson, what do I actually say? When I get somebody on the phone, or I'm in a conversation, or I'm at an event, how do I actually talk to an investor? What do I say? And the first thing I would say is, when you get on the phone, obviously you can say the purpose of this call is to get to know you a bit as an investor and find out what you're looking for and see if it would make sense to work together. And then you want to try to find out who you're talking to. So you want to tailor your conversation to them. So if I'm talking to someone and I ask them, one of the questions we ask is, what's your experience investing in real estate? And if they say, I've never invested in real estate before, or I've done a single family or two, that's a very different conversation than somebody who's like, I've done 10 syndications and I've done all these multifamily deals and I'm looking for this specific type of return in these markets. Well, those are going to be two very different conversations. So you need to tailor your conversation. You got to find out really what's important to them. And that's something that really allows you to connect with people. I'll get into it a little bit, but I do have a list of the questions that I ask people, and I'm happy to email that to you. It's not an opt-in or anything. I can just send that to you. So my contact information will be at the end, and I'll happily send that over to you, and you can use that when you talk with investors. So like I said here, so there's a range of questions we ask. Some have to do with net worth, goals, experience, and when it comes to just a lot of those things, it's really important that you understand who you're speaking with and really what's important to them. And then basically after I get some information from them, I talk to them about, their goals, what they want, their net worth. That's one question I ask is, what is your net worth? A lot of people feel uncomfortable talking about that, but I think it's important because if somebody has a $200,000 net worth and they want to put, 100K in your deal, maybe like that may not be the best opportunity for that person. It might actually add a lot more risk, and you just want to make sure that you have a good fit with the right type of investor. After I kind of go through that, talk about kind of what our standard deals look like, I'll say, here, these are our values. And I'll say, we really focus on conservative underwriting. I'll give examples. I'll say, we don't look for, numbers that blow you out of the water. We try to say, what's realistic and if things slow down. So, for example, if rents are growing 5% per year in Dallas, which they have in certain areas, over the last 10 years, we'd say we'd probably use a growth figure of 2.5 to 3%. So again, we're being very conservative. We'd actually probably rather have lower numbers that we feel are more achievable and outperform those numbers than to have these really lofty numbers. So I talk about conservative underwriting. I talk about transparent communication. It's really important that any deal that, some things go well, some things don't go as well. And we hope, things turn out just fine. And you can see our track record, but in the event that something doesn't go as planned, we try to communicate that very promptly with our investors and get back within 1 to 2 business days if anybody has any concerns or questions. So transparent communication is important. And then the other thing, this is really important, is I tell them, we're not looking for 50K or 100K for an investment. We're really looking for a relationship, a long-term relationship with our investors. And our goal is to do multiple deals together over time. Hopefully 5 years from now, you will have invested in multiple deals with us. You referred friends and family, and, really that idea of partnership. And that kind of takes some of the, people have a lot of fear about, is this person like Bernie Madoff, or are they going to take the money and run or whatever? When you're basically starting talking about, being conservative, transparency, and partnership, those are things that we really look for as for long-term partners. So I'm just trying to, again, set the table in a way that people kind of know what to expect, because if they've never done this before, they have no idea. You have an incredible opportunity to help lead them into a great relationship with you, as well as a great relationship with a great asset class and some great deals. I just got a few more slides here, and then we're going to get into questions. But the goal, really, when you after you've had these calls with investors, is to really get them teed up so that when you have a deal, they're ready to go. So you want to basically talk to them. You want to answer any questions they have. I always send them an example of a deal that we've done or that we'd like to do after the call. So I'd say, here's an example of a couple of deals we did recently, and basically, I just want to make it give them as much information as they want to have, so that people ask this question: do I find a deal first, or do I raise the money? Do I look to raise the money first? And I would say, if you're looking to be able to raise money, it's start to have those conversations and basically prepare people to become investors, because it's always easier to be like, oh, here we're building this kind of group of people that would be interested in investing, rather than, okay, gosh, I've got to go out and find these, and how am I going to fill this $1 to $2 million I've got to raise? And I want to use an example here. There's the idea of hunting, and then there's farming. So a hunter, we all know about the hunter. Like we talk about the typical salesperson, right? You go out and they're just, they're going to go get somebody to buy whatever it is, and the used car salesman just going to go and make it happen, right? And nobody really wants to be sold. So all this stuff that I talked about providing value and providing resources, it's a lot of work, but I really liken it to farming, because you're actually just going out there, you're consistently putting information out there, you're putting value out there. And then when it's time, you're able to actually go in and be able to say, hey, if you're interested, come and invest in one of our deals. And then people come forward and say, yeah, actually, I would be interested in that. So again, it's always just this continual farming process. And then when you're ready, you actually have the ability to go and be able to bring people into a deal, which is great. I want to touch base on this a little bit too. There is a psychology of this, and there's kind of a dichotomy between abundance and scarcity. And I'm going to say that both are important, and I'm going to set that up in an interesting way. So, an abundance mindset as somebody who's raising money for a real estate project is the mindset that, hey, this is available. If you don't want to invest, we've got plenty of investors. I'm sure we're going to fill it up. And basically coming across as if, hey, this deal's here, it'll fill it fast. If you're not interested, if you're interested, great, let me know quickly. If not, there'll be another deal in 3 or 4 months. It comes across very much that you don't have a need for money. You're just seeing that, hey, if this is something that would help them, it's available and you can let me know. And you're saying also that this may fill up quickly. So you're also kind of that I'm basically coming across from an abundance mindset or an abundant way. And when someone sees that, they can say, oh, this person is not really trying to sell me anything. They're just simply like, hey, if I want to get into this, there's kind of a time limit to it. Hey, this will probably fill up in a few days, or maybe we like that one we did in a day. And it basically causes people to make decisions. So again, you're not forcing anyone. You're not saying, hey, you have to do this, or here's the time, or whatever. You never want to come across that you're out there hunting or you're hungry or any of that stuff. It's just that, hey, I'm here. This is what's available. We know it's a great deal. We know it's going to fill it fast. If you're interested, let us know. And even if that's not fully like, you got to raise $5 million in the next 30 days, you just try to keep that mindset, because that's really how investors are drawn to it. Nobody's drawn because you've got a deal and you need to raise so much money. They're drawn in because it sounds like a great opportunity. There's limited space, and they may have the opportunity to get in here. So again, it's interesting some of the psychology that goes into it. There's a lot more there, and there's a lot more we could talk about, but I just wanted to touch on that. So again, we're going over the process when you have a live deal. So this, again, I just have some information about my investor club and some of the information here, that report I mentioned, all that stuff's on my website. But if you want to send me an email, I'm happy to send you those questions. But I look forward to any questions that you have. I think for me, it's really about trying to add value to you guys, because I'm still in this boat. I was with a larger group. We did a bunch of stuff together, and I branched out on my own about a year ago, and I'm raising money for deals. I'm in the middle of a deal right now. And it's just a lot of fun to be a part of. It's a really wonderful industry to be in. So I'll go ahead and stop the screen share here, and then we can take it there from any questions that anyone has.
That was great, Bronson. Thanks so much.
Bronson, I have a question.
Go ahead.
Yeah, go ahead.
Hey, Penny.
All right, I guess I'll go. Question: as capital raisers, we don't always belong. We're not necessarily partnered with like one specific GP team. So sometimes it can be, this group or that group or that group. Do you find like when talking to investors, like that can confuse them or that worries them? Like, oh my gosh, like you're not telling me one specific guy, one specific name. It could be this person, it could be that person. Like, does that scare them?
I think, yeah, I mean, it depends on who the investor is. And I think that's a very legitimate question, because when I get on the phone, sometimes people are like, well, hey, like, well, what are you? Are you just a money raiser? And so it's funny, like it comes up, are you just raising money for deals? Because typically the more you see kind of behind the curtain, there are people that operate deals, and then there's people that actually will raise money for deals. They're not always the same people. And so what I say is, kind of to approach that, I'll say, I'm doing every part of this deal. I didn't find the deal, and I'm not the primary asset manager, but I'm, underwriting each deal. I'm going to each property. I'm walking competing units. I'm investing passively in each deal. I'm a part of the asset management team. I'm doing, raising capital, and I'm doing investor relations, those are actually two separate things. Raising capital is before a deal, and investor relations is after a deal. Now, really, when it comes to working with different groups, this question does come up, because when I was working with Nighthawk, which is a larger group, one time we went 10 months without having a single deal. So all these investors chomping at the bit, and I just didn't have anything to offer them. Now I just finished a couple deals that hit about the same time. I've got another one that I'm getting ready to do. So when you work with different operators, it actually allows you a way to have a more steady flow of deals. So that's, I guess, an advantage that I find. And again, there's something called a broker dealer, which some people they get a special license. It really limits what you can do as far as, some of the farming and the marketing and advertising of deals or some of that, but it allows you to just be a money person that basically puts money into real estate deals. I prefer really to be a real estate person that's involved, going to every property, doing all this stuff, really involved. And then also, we place money in those deals as well.
Absolutely. Appreciate that.
So I have a question, Bronson. So you mentioned like some of the numbers and conversion rates that you have, like for example, 17% conversion rate for phone calls, etc. Now, how many of those phone calls are coming through, let's say, different media, like different platforms? Like, is it? I mean, I don't know if it's like too personal. Is it like through website primarily, or is it I know you mentioned some of the in-person meetups you did, etc.
Yeah. Yeah. So there's different sources. I mean, previously when I was working with a team, it was more, there was a really well-known podcast that one of our sponsors was associated with. So that was one way we're getting a lot of leads. More recently, I mean, I'm still getting a lot of calls, but it comes through, putting things on LinkedIn, through YouTube, I do these events once a month, where we had an event last month with some big influencers where talking about inflation. And so one of these guys, and this is again a way to add value to them as well as the community, is I basically said, hey, we're going to have these three people that are well known on YouTube. Each of them have over 500,000 views on specific videos. So you have at least one video with at least 500,000 views. And one of these guys named George Gammon, who talks about inflation, came on, and he sent it out to his entire list of 20,000 people saying, hey, come to this event my good buddy Bronson's doing. Now, I don't know George that well, but he sent that out. And so instead of having 150 people sign up for an event, I actually had about 850 people sign up. And basically, when that happened, I was able to get everybody's contact information and then be able to, continue to kind of get them in that funnel. So again, you never know. Again, it's just continual farming. So every week I'm sending out some sort of blog or an article or a video or different things on social media, doing different interviews like this or panels, or I'm hosting panels. So again, it's just trying to find a way to have people connect and say, this is what we do. And if you're interested in joining us, this is something that we do. So I talk about it, but again, it's just continually adding stuff. And then in every email at the bottom, it says, hey, it looks like you haven't joined our investor club. Why don't you join and find out about one of our deals?
Got it. And in terms of the investor profile, you mentioned a lot of details around that. But for example, you said the average net worth is 2 million, but what is the median? Because there are some people with like 10, 20 million, you said.
Yeah.
Significantly, I mean, like just over a million or for accredited?
Yeah. So I'm not sure exactly your question, but the net worth, the average net worth was 2 million. So some were much more, some were much less. But the reason I share it is because a lot of times we just don't know, especially if we're not asking that question about net worth. And the reason I think it's important is it starts to really build that financial relationship with individuals. And what I say, if you're uncomfortable asking for net worth, you just kind of go through your questions and say, hey, somebody, are you accredited or are you, non-accredited and sophisticated? And then they'll say, oh, I'm accredited or I'm sophisticated. And they say, okay, you're accredited. And for our records, what would you say your approximate net worth is? Most people will just tell you. They'll just be, and I'll just say, this is confidential for our records. If some people feel uncomfortable, which they will, I'll just say, okay, well, would you qualify then based on net worth or on the income? Because there's a couple of different ways people can qualify. And so if they'll say it's on net worth, then I'll say, okay. And then I'll make a note that their net worth is over $1 million outside of their primary residence. So again, it's being willing to have that conversation. I think it's really helpful. It's something, again, you just have to, I think it's good to ask. I think it's something that it kind of also builds trust because you're asking, but very few people have really batted an eye at like, why are you asking that? Because again, you have to ask certain questions when it comes to developing a relationship with them to be SEC compliant.
How do you find investors to contact?
Yeah, it's a good question. So the biggest thing that I mentioned was the idea of being a farmer. So again, it sounds a little bit odd because I don't have a list. I'm not cold calling anyone. If you think of it like people that you look to provide a service, you might go to Yelp, you might go to Amazon, you might look online, you might start watching YouTube videos about a certain product. And then you might feel like, hey, this person seems like an interest. I should reach out to this person. And it's interesting with Michael Blanc, the guy that I worked with before I'd met him, I felt like I'd spent hours with him because I'd listened to his podcast for hours. I'd watched a bunch of his videos. I'd done some of his trainings. And then when I met him, I was like, oh, hey, Michael, how's it going? And he was really kind of standoffish because, right, he'd never met me, but I feel like I already knew him. So that's why when things are, ways you can put yourself out there where people can get to know who you are, they get to know you through some of the content or different things that you create, then people just reach out. So it's much less about, you trying to go out and just find investors than it is about providing content and providing value. And that attracts people that would be interested in investing with you. So it's kind of an indirect way, but I really think it's the best way. Otherwise, you're just simply more of a transactional person. It's like, oh, I've got this deal with these terms. Like it's a different type of a relationship versus somebody who's drawn to you because you're obviously a leader in your space. You're speaking about things in such a way that really makes sense. And they're compelled to want to reach out to you because of the trust factor and the credibility factor. Does that make sense?
Yes, but I was just wondering, how would you go about building those relationships? Would you go to events, or what do you recommend?
So there's a couple ways. I think I do a lot of in-person meetups. I live in California, Southern California, where we're officially gone back to masks again. And so it's a little harder to do live events here, but I've been to Texas 6 times this year. I'll do, there's different multifamily conferences and things that I go to. I have found some investors through that. But again, I just find it's through this idea of a thought leadership platform. So if you look at people that you respect that are doing things in real estate at a high level, they're almost always, they have a pretty good online presence. They're building through internet marketing. You certainly can, though. There's a guy that I know that's in Minnesota. He doesn't even have a website. He basically has been very successful through just local meetups, and he's raised, I think, probably about $20 million and done a ton of deals, just continues to do more and more deals. So I think there's different approaches. This approach that I'm talking about is a little more of a, how do you kind of build a presence and do it to where it's a little more scalable? But it doesn't mean that you can't be somebody who in your town or area, especially if you have a lot of good relationships with wealthy people, or you have a way to develop that. But I found in general, if you can, really set yourself up as somebody who's adding value, online and in videos through different sources virtually, it comes back, so many more people can see it than just a single conversation.
Okay.
Bronson, I have another question. Sorry. From the 17% that you had mentioned earlier, was that 17% of the people that had said yes, or are those including a bunch of maybes too? I'm just curious for personal reference.
Yeah, so 17%. So Penny's asking about the 17% of the conversion rate. Those are people that actually put money in the deal. That when it was time, they actually wired the 50K or 100K or 500K and actually invested in a deal. So a lot of people say, oh yeah, I want to do it, whatever. But when it comes down to it, the deal's available. They can fill out the paperwork, but did they send the money? And if they didn't send the money, then they're not in the deal. So those are people that actually wired the funds.
So another question we have on the chat is how long it took you to talk to 1,000 investors? I think it's very interesting because most people expect it's kind of like a big thing, but it's like really small numbers consistently, right? Bronson, it's like 13 per week. So it's a year and a half, roughly.
Yeah.
That rate. So it's just being consistent every week. I assume like if, that's aligns with your experience.
Yeah. So and again, there's people that I follow or I see what they do. And whatever your thoughts of Grant Cardone is, he's a presence, he's a force that's out there. And he basically said, he's asked in an interview, what would you say your superpower is? And he just said consistency. And if you look, he's posting like every 2 to 3 hours, he's got a new post going up on social media. There's just stuff going out there consistently. So the more you consistently do it for a long period of time, the more people, even if they don't, and when I say Grant Cardone, some people are going to be like, oh, he's amazing. And some people are like, they don't respect him or they don't like him, but they know who he is. So the first thing is they have to know who you are. So if they don't know who you are, you'll never get to where they can like and trust you, right? So you've got to continually put yourself out there. You've got to continue to do more to be able to have a presence and have people get to know what it is you're doing and what it is you're offering. And the more you do that over time, I think it just becomes like an engine that gets going. And then, the consistent action. And again, I say those 13 calls, it's not like, again, I sit around, I'm like, okay, I'm going to schedule calls, whatever. Is I've got the time open in my calendar. And as I do these events, people just schedule calls. Like it just happens. It just kind of goes and just kind of magically they show up on my calendar. Well, how does that happen? It happens because I put out content, put information in there, and then I invite them through my emails, if you want to find out how I do it, you can go on my website and sign up for my, list or my club, and you'll see how that works. And basically you'll just see the process of how people are invited to join the club, and they'll be continually invited, or like that's typically how I do it. And yeah, in some weeks it's not. I mean, this is, again, when we were really booming, it was 13 per week. I'd say now I'm getting, maybe 4 or 5 a week. It goes up and down. So it varies.
Got it. Actually, Michael Blank, he talks about building raving fans, right? So that's something I think I always felt he does really well, since he has this like amazing content on YouTube, in my opinion, and that is truly accomplishing, kind of even beyond like and trust, I would say.
Yeah.
Actually, like kind of like fans of sort.
Yeah. Yeah, I would say there's a couple books. I started talking to Michael about this one time. I was like, how do you do this? How do you create all this? Because I was been working with him for a while, and I said, I don't understand how are we getting all these leads? And he recommended, there's a book called Super Fans by Pat Flynn. I'll put the guy's name in. It's called Super Fans, and it's a great book. Is it basically how do you create raving fans for whatever it is you do? And if you can do that, okay, so I put the book name in there, Super Fans by Pat Flynn. And there's another lady named Amy Porterfield. And he's like, I follow these guys because internet marketing is a really valuable skill. And in real estate, not a lot of people have, the ones that have done it well have more leads than they know what to do with. But again, it's trying to understand, how do you give people a great experience so that when they look at you, they see you as a person of value, that you're adding to that conversation and you're helping people to get where they want to go. So because Michael does that, he sells courses. He really is, his avatar or his focus person that he's trying to reach is really somebody who's trying to do syndication on their own. So he's got great courses. If you haven't, he's got a mentorship program. They help you do your first deal. He's got all this stuff. And the people that go through that and they do their first deal and they become absolute raving fans, right? And he's a nice guy as well. So again, it's trying to create people that love what you do and who you are.
Okay. Yeah. So next question on the chat: how you present yourself and your confidence in your own abilities, and then it's continuing kind of attraction and call to action. Keep it simple, straightforward. No false pretenses, no ulterior motives. I guess there's some examples that person is giving, but yeah. So how you present yourself and your confidence in your own abilities.
Yeah, I mean, I think there's a fine balance, right, between confidence and humility. Some people can be very confident, but then they're not humble. And I think I think this is something that's interesting too. When you're first starting out, it's like you're trying to get people to invest, $100K with you or $50K, and it can feel really intimidating. And you're like, well, why would somebody want to invest with me? I don't have any experience. But the thing about it is you can find other people that you you partner with. So for an example, I have a deal we're doing right now, and the guy who's one of the lead sponsors on one of the lead operating partners, he doesn't have a ton of experience. He's basically got one other large apartment complex, and then he's got this one. But the part with one of the main partners who runs a community, he has over 9,000 multifamily units, and he is in the deal and he's available. He's going to be helping to operate this asset as well. Now he's not going to be doing the day-to-day stuff, but he's available. And to me, it makes me feel much more comfortable having him on the deal and knowing that he's there. And so again, you can always project not just in your own ability. You can say, well, the team is this, or the team has done this, or this other person has done this. And again, if you show here's the prior performance of this team and this group, you're not necessarily talking about yourself. But I think the biggest thing is people have to really feel like, not that you're the best at everything in the world, but you're what you see is what you get. This person is reliable. The deal should perform well, and they can trust you that you're going to be honest, particularly when things don't go well. But again, I mean, there's different reasons why people invest with different people. I find if you're just you kind of shoot straight with people and you're just honest, you're like, hey, this is what it is. This is where I'm at. This is what I'm doing. This is why I like this deal. This is why I'm investing in the deal as well. I think for a sponsor to invest in the deal, I think it's important. So I think that's a good thing.
So Carlos is asking on the chat, so how do you create a feedback loop framework to improve your fundraising pitch and process?
Yeah, I mean, I think so. I guess the question is, how do we create, like, how do you get better and how do you improve, especially from feedback? I mean, I think you have to try different things. There's a good book out there by Robert Kiyosaki that it's called Before You Quit Your Job. And if anybody's interested in quitting their job and doing real estate, this is a great book because it basically talks about the difference between being an employee and being an entrepreneur. And they're very substantial. As an employee, you are really taught to not make any mistakes. If you make any mistakes, you could be fired. If you're an engineer, you make mistakes, you could be fired. If you're doing whatever the job is, you make too many mistakes, you will be fired. As an entrepreneur, you have to be willing to make a lot of mistakes and then quickly learn. So I've done that where I'll spend advertising over here and that works okay, or that doesn't work, or something works really well. And I'll try different things to try to figure out what is working and then really focus on that. So if you find that you're going to a lot of live events and that's really working for you and you're networking that way and you're putting together events, that's great. If you're hosting online things or you may be putting out content and that's working for you, then do more of that. So just figure out for you what works. And again, just because one thing works for me or it works for Michael Blanc or Grant Cardone doesn't mean that's going to work for you. It doesn't mean you should do that. So like I mentioned, there's my friend Drew in Minnesota. He's raised over $20 million in the last few years, and he's just done it by really sitting around the living room table or the kitchen table and having conversations around real estate and going to meetups.
That's great. And next question. So where do you get all the investors' phone numbers? So I guess what are your most productive call to action?
Yeah. So again, I have the best way to answer that is you can just go to my website and check it out. And so when people go on and they click the join button on my website, Bronson Equity, they can they get walked through a little questionnaire that says, okay, what's your name? What's your email? What's your phone number? What's your, investment desired investment amount, whatever. I don't ask them too many questions, but I'll ask them a few little questions and then they click that and then they go to the next page. So I've already got their phone number, I got their email, I got their name, and then I have them schedule a call. Now, not everybody schedules a call. So I have them on a certain type of list. It's like, okay, they've done all these things, but they haven't scheduled a call. So I'll basically now send out an email every day for a few days, just saying, hey, you haven't scheduled a call. I'd love to, have you be fully into the club. And so, but yeah, I mean, I think it just comes down to that idea of a funnel that you're basically trying to draw people in through doing activities, speaking, you're putting out content, you're going to places, you're handing out business cards, and people are finding their way to your website, and then you're capturing that information, and then you're basically all that's working toward them to get on the phone. Now, of my list of 3,000 people or 2,800 people, whatever, not everybody's on my investor list. There's maybe like, I don't know, 450 people that are on the investor list. So not everybody is going to be on there, and that's fine. That's fine. Not everybody has to become an investor, right?
Right, and you mentioned a funnel and essentially like kind of like the overall leads process, etc., and then the sales funnel, I guess, on top of that. And I feel like often like people when they ask questions, probably you get that a lot in terms of capital raising, right? They would think it's some kind of skill of like essentially being a people person or something, or like having like really good networking and connections, and it's really not that today, right? It's more of automations and having a consistent automated process online. So it's become more of a data project, I feel, and then only like an online marketing project, where you want to make sure you build your systems consistently. To your point, you have a very quality content that you put out consistently, that has call to action consistently, and it's drawing people to where you want to get them. And I feel there's often this, I wonder what is your impression. There's often this kind of misconception or expectation that it relates to sort of being connected to a kind of wealthy circles or something, and it's really become much more automated and much more data driven today.
Yeah, no, I agree. I mean, I think, and I was really intimidated. I got to obviously work with someone who was working with these processes, but I've always told myself, man, I'm just not a tech guy. I mean, to figure out all this like internet marketing and the email, and I was literally that guy. I was like, oh, I'm not going to do that. I don't, this is just, it's too much. And it was, honestly, there was a lot of, it felt like brain damage where I'm just like, oh my gosh, I got to figure this out. And why isn't this working? But I just realized that, learning, the program I use is called Activecampaign. And it basically shows you, like, there's videos, tutorials you can watch, whatever. But once you learn how to do something, you can teach someone else to do it. So once I learn how to do, okay, this is how I send automations. This is how I create this process. This is how I do this. Then I can create little videos or walk through, like, and then I basically hand that off to a virtual assistant or to someone else. And they basically do that. So I've got a full-time assistant in the Philippines that helps do a lot of those processes and it helps with our events. But that's something Michael said to me one time. He's like, oh, he's like, if I learn something, I know I can teach it. So as much as challenging as it is, and as much as maybe, people on the call here are working a full-time job and are trying to make it work, like, I totally get that. I mean, I was doing this for 3 or 4 years while working a full-time job, trying to hustle on the side, and I was doing it. But it was a lot of work. And then I realized, like, well, if I do it now, I'll learn it and then I can scale it. And just recently I was able to leave my kind of long-term consulting job and just be able to do this full time. So it's definitely possible.
Awesome.
I have a question. So what should you present in your pitch to an investor?
As far as the, like, when you have a call with people or when you're actually presenting a deal?
Either way, like, what would you include in your pitch to attract an investor?
Yeah. So I don't know if were you on the part when I was talking through the kind of the talk track when you get an investor on the phone?
Yes.
Okay. So again, there are two different things. I think one would be, you're kind of teeing things up, you're setting the table, you're letting them know who you are. That's kind of the initial call. This is what a deal may look like, getting to know them a bit. That's more relational. When you have a deal, and this is why I suggest, you listen to podcasts, you go to events, join everybody's investment club if you can, because you'll basically get to see how people pitch their deals. And you'll get to see, oh, I like the way they did this on the webinar. I like the way they did that. Or, they did this and it really wasn't good. And so that's kind of how you learn. So, there's a process, I guess, we go through and we build kind of what the webinar looks like. We just have kind of here's the team, here's the area, here's, our track record, here's what we're doing, here's, what we see the upside to be or the risk to be. And we just kind of walk people through that. And, we try to really, have kind of a why we feel this deal really makes sense. And if we do that, then, we take people on that journey. We have enough people in there. We feel like there won't be any problem filling the deal. So I know that's a little general, but I think it would take, that's probably another presentation to go through, what actually a compelling webinar looks like. And that's something, maybe we could do another time.
Yeah, thanks, Bronson. So we're going a bit over time, but we have a few questions. So I'm just going to go over them kind of a bit quicker. So first question is, what are investors looking for in terms of returns, and what is a sample term you established when you first started?
So yeah, investor returns vary based on who they are. I'd say a very common one is kind of what we do, where We have, total return, IRR, which is internal rate of return of usually 14 to 16% per year. And that's the total return. And then within that number, so part of that return is what's called the cash on cash, which is basically kind of the paid out as you go number. So you'll get about, in a lot of these deals, it's, you get paid some money through cash flow every quarter, every month. And that's usually about half or maybe a little less than half of the money. And then maybe the other half is when the property is actually sold. So those are kind of two ways. And then how we structure, we usually get paid in three ways. At least our group does. We'll typically do an acquisition fee on the front end of 2 to 3%. So that means if it's a $10 million deal, that'd be $200,000 to $300,000 on the front end, and that's split up among all the general partners. So maybe my fee would be, if I raised all the money for that deal, it might be, I don't know, 70 to 100K on the front end, and then you get paid an asset management fee along the way, which is just kind of to cover the expenses to manage the property. And then on the back end or in the cash flow, it's usually 80-20 or 70-30, meaning 80% of the profits go to the limited partners or the investors and 20% goes to the general partners. So that's kind of a quick overview of kind of how we structure these deals.
And how do you find contact information for investors? And do you recommend cold emails at first to cut the ice?
I'm sorry, I didn't catch. I'm having a little trouble hearing you.
You touched partly on it, but how do you find the contact information for investors? And do you recommend cold emails at first to cut the ice?
So you can do cold emails. The challenge with doing cold emails, and I've done it, is that your email kind of gets tagged as spam. And that's hard. Once you're automatically put in the spam box, it's hard to get out of it. So I think you can, it's just hard, but there are ways. I would say in general the best way to do this is just to continue to put things out there. And also too, like I said, make yourself valuable to valuable people. So when I'm doing these panels and I'm doing events myself, I basically try to say, hey, how can I really help these other really well-known syndicators and really provide value to them? And I know if I can do that and I can do it well, then, there will be opportunity because I'm kind of attached to their brand, right? I've seen as being associated with them, and it brings more people into my funnel. So again, it's for a lot of people, it's hard to think about like, well, how do people just, how would I do something like that? But I think again, it just has to do with coming back to how you position yourself, how you're setting yourself up in the market, and having a way that when people go to your website, and if you haven't gone to my website yet, you can, I'll put the stuff in there again, but you'll see it just pops up. And if you're there for 3 seconds, it'll pop, hey, download this free, whatever. And people do that in all different types of things. And that's how you capture people's information. And that's just the first step, but that allows you to start building that relationship with them just through some of those automations.
Yep. Yeah. Having a lead magnet, right? And that I assume is part of it. And then, so can you explain more on what you tell investors about what are some of the risks?
So in the PPM, which is the document, we basically talk about the risks that you could lose money, you could have capital calls, other things. I tell them basically, if it comes up, I say the best deals we've had have been returned over 30% per year. The majority, I'd say 70% of them are kind of the 14 to 22% per year, and the worst deal we've had has been an 8 to 12% per year return. So I'd say on the low end, it obviously could get worse than that, but it kind of shows you a range of like the 12 deals that we've been involved with. Like in general, we've had pretty good results. But there's a risk to every investment. So we tell people, you never invest with money that you need right away or you can't afford to lose. And I think that's, part of that is in the legal document, which is called the private placement or the syndication paperwork. And that's why you do that. So that's why we really recommend you spend, and it costs money. It's an investment. It's $7,000 to $15,000 to actually set that up. But when you do that, or the team you're working with does that, it really protects everybody.
Okay, do you guys have maybe last questions before we wrap up? Okay.
Oh, sorry. Hey, Bronson, what was the that lead base? I guess I'm not sure if you call it CC or RM that you use. So when somebody contacts you.
Are you talking about basically the software that people you're talking about? I think it's Activecampaign is what the software that you use.
Yes, that was it. Thank you.
Yeah, so I just put it in the chat box here. It's called Activecampaign, and you can start at $9 a month, and you can scale it up to the moon. So that's what I use. Michael Blanc, a lot of these really successful people, they use that program because you could have 200,000 contacts in there. You're emailing every week, and it can handle it. So I think it's good. But yeah.
So actually, any other tools, Bronson? I think that's a great one. But any other tools you can recommend?
Any other tools? Yeah.
Marketing, yeah, overall.
Yeah.
Yeah.
Trying to think of what else we use. Activecampaign is a great one. I think because it integrates so well. There is a really good program if anybody's interested in hiring a virtual assistant, because again, after a while, some of these tasks just get to be kind of laborious. If you search Neil Bawa and you search virtual assistant, I'm going to put his information in here. If you just search this term, it will kind of give you, he has kind of a webinar that's free, and it just talks for about an hour about how do you select a good virtual assistant. And I used it, and I found somebody that's awesome. She's been with me since December, and I'm just, I think I pay her $6.75 an hour, and she works 45 hours a week, and she's phenomenal. I mean, she doesn't do, she's not perfect at everything, but she is great. And I'm really grateful to have her. I could not do all the things I do without her. So I think the first hire for anybody is having somebody that if you can train little tasks, especially for some of these content creation things, and you can have other people help you, that's a really great tool. So
do you use like a separate tool other than Activecampaign for your sales funnel, let's say, or?
So I use Activecampaign, one Activecampaign for everything. Some people do some of the cold email stuff, and there are strategies where you can buy emails and kind of do cold emails. I haven't done it, but some people do. I mean, but again, what I'm trying to do is not necessarily spam people to get them onto my list. I try to like create stuff. And I imagine you'll put this on YouTube, or you'll put it on, different platforms like we do with some of our events, and people may find it. They may reach out through that. They'll say, oh, here's somebody talking about this, and maybe I should reach out. So again, there's a way you can kind of just try to, hey, get people through some other side door thing, which, is okay. But the best way is that someone can see you as, here's a person of value. Here's somebody I want to learn from, and I want to join their network because I'm getting value from what they're providing.
Mm-hmm. So I don't know, anything on the social media side, perhaps, other than just, I guess there it's fairly lower tech in a way, like just posting quality content, or?
Yeah. The tools. Yeah. So I mean, I've gone a lot with this, and I've spent a lot of time thinking about this, but for me, you have to think about who it is you're trying to reach and where they're at. So I find a lot of people that invest with me, they're not on Instagram, they're not on TikTok, but they're on Facebook and they're on LinkedIn. And so, I have a lot of content that's put out on there. There's a lot of stuff that my assistant and I will kind of work to reproduce. I've also found that whenever you go to an event, whenever you're at a property, if you take pictures or videos and you post that on particularly LinkedIn, and you just tag the different people that you're there with, or that may be interested in it, or friends or whatever. Like I've had some views recently where I was at a conference and I was actually at Michael Blanc's event. I tagged a bunch of people on there, and it got like over 6,000 views just from me being there, tagging people and putting it on there. And so, and I get a bunch of likes and comments, whatever. So it's just another way people can see what you're doing. And, honestly, I'm not a huge social media guy. Like I kind of wish social media didn't exist in a way, because it's kind of such a time suck. I mean, you can spend all your time doing social media, and it's kind of gone after like a few days or a week. It's like people don't really look at it anymore. But things such as podcasts or YouTube, those things, they can live a long time. And YouTube, they can really live for years. So, or events like this and other things that you repost on YouTube. So I think it's important to have a presence. I don't, know you have to be doing stuff all the time, but you've got to figure out really what is producing results for you. And then when people do schedule calls or they reach out, you can ask, hey, how'd you find out about us? And that's always a valuable question, right?
That's great. Yeah, that was really awesome, Bronson. Thank you so much. It was really a pleasure. I learned a lot myself. Hopefully everyone else as well. If you want, once again, to share your contact information or anything, guys, make sure to reach out. And yeah, it was great.
Yeah, thanks so much. Well, I appreciate you having me. You guys have a wonderful crowd here. I'll put my email in here if someone wants to reach out, and I'd love to, be a resource in any way I can. And again, I think, I imagine you'll probably post this up online, but there's lots of good information out there about, whether it's, internet marketing or how do you find investors, but I hope this was helpful. But thanks so much, Stefan, for having me today.
Thank you so much for taking the time. Thanks.
Sure.
Thanks everyone for joining. Bye-bye.
Thanks. Okay.